Good morning. Stocks starting the day way down. Bonds, major rally. We'll get to that in a minute. Well, it was election night last night, and as you all know, Barack Obama winning his second term. What does that mean for us in the mortgage and housing industries? I think that interest rates still will be headed lower. I think that Ben Bernanke has less of a chance of being replaced. He'll probably serve out his term, and he's been quite dovish. So, what does that mean? Quantitative easing probably stays in place, and as a result, probably you're seeing some reaction in the bond market today. But I don't think it's a major change in any way for interest rates because they were probably going to be headed lower. The thing of it is that they probably will stay lower longer. Now, in addition to the news on interest rates, how does it affect the overall mortgage industry? Well, with Barack Obama in office, you could probably count on a chance of greater regulation. We've been moving that way, greater power for the CFPB. I don't think that Mitt Romney would have changed that, but you can expect greater regulation, and there's probably a cost for that greater regulation. With regards to how it might affect housing, that's going to be a tough one to call. Certainly if you're viewing it, probably depends on what your views are. If you're viewing it as a Republican, you probably are saying, well, more jobs might have come under Romney. That's probably good for housing. If you are viewing it from the Democratic side, you might say that Barack Obama will be good for the housing market because there may be more government programs. Difficult to call, certainly. We'll have to see how that plays out. I still think the housing market overall is on an improving trend and will continue to do so. Whether that accelerates or moderates, I think that over time, the housing market will still remain very strong. Now, let's take a quick look at what we have in the charts. By the way, we are bracing, believe it or not, for another storm here in New Jersey. I'm not joking. After Sandy, we've got a nor'easter, whatever the heck that means, coming and approaching. 10-year Treasury note. As you can see, we are doing very nicely on yield. This triple layer held, although yesterday we tried to make a move above it. And now down to 163 on the 10-year note. Wouldn't be a surprise to me to see a move lower towards this area here where we formed a base. That's around 160 on the 10-year note. So wouldn't be a surprise to see us approach this floor before facing some resistance. Prices starting to get in this oversold territory. They can remain there for a while, but this is where we have to watch because that's when you can see the turnaround occur, just as we saw right here, just as we saw right here. So we're still a ways off until we get down into here and we see a stochastic crossover, but we do have to be mindful of it. Let's take a quick look at the stock market, and stocks, as we mentioned, are not reacting great. They are testing this bottom band. Look at how amazing it is. Just reached the top of this band yesterday. Today started there, and it's been straight down now the bottom band. We've been trading within this range here between what is the 50-day moving average here on top and the 100-day moving average. Anybody who doesn't pay attention to technical indicators just hasn't watched them for that long because they truly do amaze you how accurate they are and people looking at the same thing. So, as mentioned yesterday, a break beneath this band here and we're moving lower, as you could see live. A move beneath this band and a continued move, we're probably going to be heading down towards 1400 on the S&P and a move beneath that way down to 1380. That would all bode well for interest rates and the bond market. At 1 p.m. today, we do have a 10-year note auction, and people will be watching that very closely. There might be some extra momentum. And here we are on the mortgage bond market. So let's start off. As you can see, we are up smartly, up 81 basis points on the day. So a great start to the day. Expect to see some better rate sheets ahead. And you can see here we broke out of this range nicely to the upside with mortgage-backed security pricing up here. We take a look, where would some of those tops be? First one would be this area right here, which we're testing right now. So if prices do improve and break above that, we can move much higher up into this 106 level. And that's a big change because remember, prices right now are 105.38. So we could see, as good as it's been, up 81 basis points, a bit of a breakdown in stocks. We could see mortgage-backed security pricing move all the way up another 60 basis points or so from these levels right now. Hope you enjoy a great day. And if you are in the Northeast like I am, let's hope we get to keep our power. Have a good one. Talk to you soon. Bye.